Alrighty, so we are a go. So, welcome everybody to Profit First Live. Today, this is presented by me, Brittany Eiden, with Eiden Tax and Accounting, and Kimberly Goode with Goode Business Solutions. So, if you don't have it already, I will drop this in the chat. Um, but this is a link to the workbook that you will need here in just a moment. So if you can, in the chat for us, will you tell us where you're from and why you started your business? A lot of times we get to help people to make money, something else totally and randomly obscure, but that is completely fine either way. So don't feel judged if it is to make money, because that's totally excusable. And if you're not in it to make money, then you will eventually burn out and probably stop. So it's okay to be a little bit selfish when it comes to this. So today, here are the things that we are going to talk about. We are going to go through a profit first overview, which includes addicted to axioms, the accounting equation, priming effect, Parkinson's law, bank balance counting, and then the 4 steps to the actual profit first. So what this is actually the overview part of a more in-depth 2-day program. Kim and I are actually working on getting this program put into place for a virtual environment. So hopefully we'll be able to have that soon. The full program actually goes into the full setup of putting profit first into your business. So now I am going to drop that link into the chat for everybody so you can download that workbook if you have not already. And Kim is going to get started with an addiction to axioms. And you're muted, Kim.
Hey, I have to unmute myself. Good morning. Okay. Um, so axioms. All right. So if the prior generation says it's true, then the current generation assumes it must be true. And you know what they say about people who assume. So 1500 years ago, people knew the earth was the center of the universe. 500 years ago, people knew that the earth was flat. This is one of my favorite lines from the movie Men in Black. But the statement does hold a lot of truth. Many things over the years, decades, and centuries were known facts have been proven to be either completely wrong or the hard way of doing things. One of these things is that people know the accounting equation. And while I'm not saying that it's completely wrong, I'm just here to show you a different way with Profit First. So let's do a little exercise. Which of these individuals, if you're looking at these two bodies here on the screen, which of these individuals would you say is inherently good and which is inherently bad? So just look at those and read the words in the middle and don't let it break your brain. Just, there's no wrong answer. This is simply just to show you how our brains work. So as you're looking at that, I'll tell you, this is an example of they are the same. So Anna said they are the same. Well, so this is an example of the priming effect. Now look at the words. There is no difference in the words associated with the individuals on the screen, only the order of the words. But in our lives, we have been taught that the items that come first have greater importance. Therefore, we instinctively think that person A is bad and person B is good, just by how the words are written. A, evil, B, love. But they're the same words if you read all of them. This effect is constant throughout all aspects of our lives. And the reason that we bring this up is that we want to flip the script. The formula for business has been around, this formula for business has been around for years, decades, scores, centuries, but it's crap. Look at this equation and really think about it. Sales, which is a requirement for all businesses, minus the expenses equals profits, meaning you, the business owner, get what's left over, no matter how large or far more commonly, how small that number is. For years, we've been doing it wrong, but it's not your fault. It's not you alone, and it's easily fixable. So we are given and taught the incorrect formula. While GAAP, or generally accepted accounting principles, which the rules which all accounting must follow, is foundationally correct, the profit formula it touts sales minus expenses equal profits is a lie. There are 28 million small businesses in the US and 22 million are break even. All use the formula. This means roughly 80% of businesses are surviving check to check. Accounting alone focuses on numbers, yet it ignores the human behavior around the numbers. So remember the old formula, expenses before profits, making us believe that profits should come last and expenses have a greater importance, but this is not the profit first way. Let's flip the script. All right, so now this new equation is the exact same mathematically. However, because we swapped expenses with profit, we are instinctively put more importance to the profit than the expenses, as we should be, because in all reality, your profit, your money in your pocket, is far more important than those expenses. Profit is not an event or something that should happen once or twice in your business, but it should be a habit, something that you are experiencing every time you make a deposit. When I first started my business, somebody told me always pay yourself first. And those words are easy to say, but they're really hard to do. So let's talk to Brittany. Brittany's going to talk to us about bank balance accounting.
It does help if I unmute myself a little bit there. Okay, so bank balance accounting. The vast majority of entrepreneurs manage their cash flow via bank balance accounting. So by show of hands or however, who looks at their profit and loss each time they want to spend some money? I mean, I'm in the accounting field and I don't even look at my profit and loss. I look at my bank to see if I have money there in my account so I can spend it. Same thing on the personal side. I check to see if I have money in the account before I go grocery shopping. So now we should be looking at our profit and loss every time we want to spend money in our business, but we don't. And the reasons why is because number one, it's not convenient. And number two, it's not logical. So like most humans, like we just don't do it. We're not going to go and look at a third party system, run a profit and loss report to see if we have money to spend. That's just not in our human nature to do so. So now here's where a kicker comes into play. Most people use one account for their business, if even that. Many people that I know actually use their personal accounts for their business accounts or vice versa. So I'm not going to ask if anyone is guilty of doing that, because I will just say this: in the eyes of the IRS, this is one of the biggest no-nos and sort of makes my stomach turn. As the tax lady, makes me a little bit queasy. So I've seen far too many audits go south because of that alone. So, but back to this one account business. If you've ever written a check and the business or person didn't deposit that check immediately, eventually you probably thought that it had been cashed, so you spent the money. Then bam, they, 4 months down the road decide to cash the check for whatever reason. I do blame them, but you're the one who gets hurt. That puts us in a not so good situation. We might end up with overdraft fees, with a negative account balance, which is never where you want to be. But things like this happen all the time. And this is just one reason specifically why bank balance accounting does not work. However, it can if you put some fail safes into place to keep you on track. So right now we are going to learn a lesson from a tube of toothpaste. So Parkinson's law actually comes into play in every single aspect of our lives, but the most noticeable is probably time and money. So we're going to take a look though at an everyday example. So you go to the store and you buy yourself a brand new tube of toothpaste. For the first week, you're putting that huge, like aqua fresh swoop of toothpaste onto your toothbrush. And a couple times you may miss and drop a big old glob in the sink, and that's okay. You'll just wash it down because you have plenty of toothpaste in that tube. So weeks pass, and eventually you end up here with this like shriveled up, ugly little tube of toothpaste. You keep forgetting to put toothpaste on your grocery list, so you absolutely have to make it through. So now instead of the big commercial swoop, you are putting just a little like smear on there. So just enough to get those teeth a little bit fresh and rinse the funk out of your mouth. So we're at this space. We're at this little shriveled up tube of toothpaste, and oh my God, you drop some in the sink. So now instead of just washing that down the sink, you're actually like taking, hopefully your sink's clean, but you're taking your toothbrush and you're like dabbing that out of the sink, and then you're just kind of like putting it in your mouth, and you're brushing it to make your pearly white sparkle. So eventually, you're using all of your might to like squeeze and like turtle head that toothpaste out of that tube. Or you might pull my trick and you like cut the end off the tube of toothpaste and you're like digging your toothbrush around in that tube to like get the last little bit out of there. Because yeah, and you could actually even run on that for days. But this is a example of Parkinson's law. So it's exactly the same for the bigger things in life as well. So with time, if we have 2 weeks to complete a project, it's going to take us 2 weeks to complete that project. So if we have 2 days to complete that exact same project, we're going to find a way to make it happen in those 2 days and get it done. We find ways to get creative, and this holds true for money as well, probably more so for money than anything else. When we have money, we spend it. When we don't have money, we don't. It's just, it is what it is. So if we have money, we may go out to like a huge fancy dinner every night, get like, alcohol and wine and fancy cocktails and like extra appetizers, or like a $40 charcuterie board, which sounds delicious right now. But when we don't have money, we're gonna be like raiding the pantry, or we might think, oh yeah, I will get that like 20 pack of ramen because I can eat that for like a week or something, and that costs like $3. I can make that work. Or any of us that have been like broke college kids and you figured out somehow to make tomato soup out of ketchup packets, which thank God I was never there, but I had friends who were there. Still sounds disgusting to me, but hey, you do with what you got. So ultimately, the results of these two things, a full fancy dinner or tomato soup ketchup packets, you're hopefully still going to end with the same result of a full stomach. So sure, yeah, one tastes better, but the taste only lasts for so long. You got that result, it got you through the next day. So the same holds true for money. If you have less money to spend on expenses, you're going to spend less. And you're usually going to end up with the same or sometimes even better results because you were forced to get creative. And I can guarantee you that if you get those results with less money, you're going to feel far more accomplished afterwards. So now we're going to get into the 4 steps of profit first, and Kim is going to kick us off with step number 1.
Okay. And I did not know anybody that did ketchup packets into That sounds really horrible, just horrible. But so let's talk about small plates. So has anyone realized that the larger your plate is, the more you seem to put on it? And as most of us were taught to clean our plates, we eat it all. Now, if you have a smaller plate, we put less on it because there is less space. We still feel we need to eat it all, however, less is there, and we still feel full. And this is actually like something that I've heard from weight loss and stuff like that. Use a smaller plate, and when you're trying to lose weight, you'll eat less and feel full. So if you're like me, my waistline appreciates the limit to the small plate puts into place. Well, the same holds true for our money. If it's on the plate or in the account, we're going to spend it. So why not allocate things out appropriately? Portioning it out. So I know that 5 bank accounts sounds like a lot, and I've heard people say over and over, I can't manage one. How am I going to manage 5? But it's not. It's really not that hard. It's actually easier than just one. But I've been using the Profit First cash management method in my business, and it has only made my accounting life easier. So I'll explain how. So the first of your 5 counts is, of course, your income account. That is exactly what it sounds like. This account is where all the income is deposited into. Income from checks, deposits, Square, PayPal, wherever. It's all deposited into that income account. However you receive income, it all goes into that account. And then we think of this account as a serving tray for all the other accounts. So now we'll have preset percentages of income that will be transferred into each of the other accounts. Profit First has set the target has a set of target percentages that are fantastic references points for determining where you want to be. The percentages were developed from taking the average of some of the most successful businesses of all sizes and putting them into an easy plan to follow. This chart is shown in the PDF that we will be sharing with you at the end of the presentation as well. So Brittany's going to talk, now that she's talked to us about toothpaste and ketchup packets, she can talk to us about vegetables.
Yay, vegetables. So those of you with kids know, like, kids usually hate vegetables. Mine are a little bit weird because I forced it on them from an early age. But, you always want to get those good things in first, basically. So if you eat your vegetables first, that leaves less room for the carbs. That leaves less room for the crap. It leaves less room for dessert, which, dessert is amazing. But if you fill up on vegetables, you're not going to want it, and your waistline thanks you for that. So similar to eating your vegetables first, we go into our accounts as well. So we are going to talk about a sequence. So sequence is kind of everything. The allocation, the order is everything. So our sequence is actually to allocate by the percentages, distribute the money into our secondary accounts, and then pay bills. So earlier we were talking about the priming effect. This is why the allocation order is so important. The sequence of how things are presented to us dictate our use of those things. So if you take your profit first, you are demonstrating that profit is the most important thing in your business. Profit is followed next by owner's pay. So both of these items together demonstrate one thing that hopefully you already know, that you are the most important person in your business. So next comes tax. So let's face it, I'm the tax lady, but the IRS is the most brutal collection agency in the world. They get what they want, plain and simple. So it's important to keep them off your back. So that's why that is the next thing on our list after profit and owner's pay. Then last comes our operating expenses. So why? Because with the operating expenses being last, you're showing yourself that you can make it work, that you can be innovative and creative and efficient and frugal. So in contrast to that, when you plow back or reinvest profits or even your owner's pay back into the business, you're going to begin to push and try less. You're going to get burnt out at that point because you're not making any money and you think the business needs all this money to survive when it doesn't. So that is one of the reasons why you limit those operating expenses, because you can work within those guidelines. I promise you, you can. So now the big thing that this teaches us is what comes first gets done and what comes last gets forgotten. So now Kim is going to talk to you about cookies.
Okay, so cookies. So how many people in here like cookies or other snacks? You should all raise your hands because cookies are amazing. Um, so do you ever notice that if you buy them and you have them at your home, then you eat them? I'm sure I'm not the only one who has noticed their pants getting a little bit tighter since COVID started. COVID 15 turned into a little more than a COVID 15 for me, but hey, okay. Well, if you don't buy those snacks and you don't have access to them, so you don't eat them. The same holds true for our money. So while the idea of multiple bank accounts might be scary to some, it is absolutely necessary. Just like the snacks in the house, if it's there, you will somehow talk yourself into using it. If something is not accessible, we don't use it. So bank account number two, or I'm sorry, not bank account, bank number two. So bank number two is sometimes referred to as the inconvenient bank or the PITA bank, pain in the ass bank. So that's what you want it to be. You want it to be a pain in the ass. At this bank, you will not set up online access. You will not get checks for the accounts. Sometimes people will choose small community banks in neighboring counties or states just to add an extra layer of inconvenience. I personally have chosen a small local bank that has few locations and horrible hours. So it would be a real emergency for me to make the effort to get to the bank on their time. I have no access to the bank other than walking in and waiting in line to get what I need. Right now, there is the added convenience of us having to make appointments and stuff like that because a lot of banks are still not welcoming people into the lobby. They're wanting us to use more online. So you should be making 4 withdrawals from each of these 2 accounts per year, and that's it. So that's all you should do is have to walk into that bank 4 times from each of those 2 accounts. And these will be your quarterly estimated tax payments and your quarterly profit distributions. So now let's talk about the rhythm method with Brittany.
Yay, the rhythm method. All right. So profit first is funny. It's one place where the rhythm method actually works. So any of the other ladies that are on here, you know what I'm talking about. So hopefully there were no ever like unexpected pregnancies due to failure of the rhythm method. But I will probably be one to admit that I'm pretty sure that's how Evelyn came into the world, for those of you that know my sweet girl. So this is the step 4 for our profit first. So the first thing that we want to do is establish that rhythm. So profit first kind of has a rhythm that is already established. It can be altered, but we're not really going to talk much about the alteration. So I'm going to go directly into that 10-25 rule. So this is the standard rhythm when it comes to transferring money from your income account to all of your other accounts. So typically that happens on the 10th and the 25th. So there is some logic behind this though. So if you transfer money on the 10th, then the money is in those accounts to be able to pay bills that are due on the 15th. And the transfers that happen on the 25th are in there to pay the bills that happen at the end or the beginning of the month. So now, like I said, you can absolutely alter these dates, but the big thing is that you want to really maintain a rhythm, because you want to see if patterns start forming in your business. So seasonality usually affects industries like real estate, and it definitely affects mine in the tax industry. So if you see a pattern like this, then you kind of know what to expect, and you can begin to work more with your accountant or profit first professional to develop strategies to make sure you're covered during those times when business may be slower, so you don't overspend when business is booming. So I'll use myself as an example. Most of my income does come in the first and second quarter, and then there's a little bump again at the end of Q3, middle of Q3, right in there. So during those summer months, there is not as much income coming in. So if you know that and you can plan proactively, you can do things like I do and have money set aside in your owner's compensation account to pay you your standard salary throughout the entire year, just like you were working 40 hours a week or 30 hours a week, whatever you want to work, throughout the entire year. So that will help you actually plan better for all your personal finances as well. Or if you need to do big business spending, you can plan for that also by knowing kind of those ebbs and flows of what your income is doing. So now quarterly, we take a profit distribution. So you're a business, obviously. So you should treat yourself like one. So all big businesses out there issue quarterly profit distribution to their owners and shareholders, and you shouldn't be any different. So just like the big businesses, when the quarter is over, you are going to issue yourself a profit distribution. So this is something that you should use to celebrate. So no matter how large, it's an accomplishment. You can take a weekend away, take a 2-week vacation, or if you don't have much in your profit account, you can go get ice cream with the family. This is definitely also one area where I tell a lot of people, if they're tired of taking 2-week vacations every quarter with their money, or even if they're not, this is a great place to use for retirement savings and socking that money away so you have it when you need it as the individual. So it's perfect for that. Then we also have our quarterly cap adjustments. So every quarter you should be talking with your accounting partner to discuss where you are and what you can do to get where you want to be. So in Profit First, we call these caps and taps. So caps stands for current allocation percentages. So we're going to talk a little bit about that here in just a minute. But then I want to say as well, so we have the taps. Those are our target allocation percentages. So I have a listing of what those target allocation percentages are, and then it's also in your workbook as well. So quarterly, we do a review of these current allocation percentages and make some tweaks and small adjustments, and this will get you closer to those target allocation percentages. So this slide right here wraps up the overview. So right now we are going to dive a little bit into the instant assessment. So in your workbook, and look, I forgot to put the page on there. Sorry about that. In your workbook, you actually have a sheet in there where you can go through and create your instant assessment. So I am going to grab that instant assessment page right here, and we have this linked on the website. I'm going to put this in chat as well. I have to add that security. So in this link in the chat, you are actually going to be able to go to this website and do an instant assessment on your business. It's a real quick calculator. You'll scroll about halfway down and it'll say instant assessment calculator. You'll scroll about halfway down and you can actually put in your numbers, your business's numbers, and see where you stand. Right here, this is what we were talking about with those target allocation percentages. This is listed on that web page as well. So what you'll do is you will do your instant assessment and you will compare it to these target allocation percentages to see where you flow in there. So if you want to take a quick moment to do that, I want Kim to share her experience a little bit of what Profit First has kind of done for her business and all of this, because I really like her story. It's a good one.
Okay, so I like I said earlier, so when I started my business, I started my bookkeeping payroll business 7 years ago, and somebody said to me, always remember to pay yourself first. And and that's not, that sentence just yeah, but it didn't happen. Um, so it just I was running my business and I always thought I just need to make more. I just need to make more. If I just got more clients, I would make more money and then I'd be able to pay myself. I just need to do this and then I'll be able to pay myself. It got to a point where in my business, I said, okay, I'm still going to run my business and I'm also going to go work at Amazon third shift because I need to make money. I need to make money. I have kids, I have tuition for their school, I have, bills. I was getting stressed, I was getting overwhelmed. And I'm like, why, I was going to Amazon and I'm like, why am I doing this? Why am I literally going to a job to get a paycheck when I own a business? I have a job. And I started my business to be flexible for my kids and for where they were going to school and stuff like that. So why am I going off to go get a job, which absolutely, completely is not completely is not the reason why I started my business in the first place. So I turned around. I was on my way out there. I turned around and went back home and thought there's got to be something different. I did eventually, I did pick up the book Profit First, and I read the book Profit First. And when it talked about, it just all made sense. I am not somebody that likes to sit. I would like to be somebody that sits down and reads books, but I'm not somebody that gives myself the time to sit down and read a book. I didn't put down Profit First. I read it first page to the end. Everything made sense. The author is so amazing. You can email him and he will respond back to you. And he says in the book, email me. And, so I emailed him and I was like, your book was amazing. This is great. And I just started doing more and more research. And then I started the Profit First methodology into my business, of course, and it made a huge difference. I was finally getting paid. Not only was I finally getting paid, I was getting a bonus. I was getting a quarterly distribution that was money that I could pay, take my kids on a trip or do just something fun for me and them, and whatever we'd like to do. And now my business has grown into there's four of us. There's me, and then I have three people, and I consider them my teammates. So the four of us actually take that quarterly distribution because we all four work hard in this business. And so we take that quarterly distribution and I distribute it between the four of us, which is great because they love seeing that bonus, and they love, they know that the harder we work, the more we do, the bigger our bonus is all going to be. And it's just fun to share and kind of have that for each other. Uh, and so anyway, so that's where like I was at in my business as a business owner. It's embarrassing to even say that I was considering going to work a W-2 job when I just felt like I couldn't make it. I couldn't make ends meet. I couldn't pay my personal bills. And now I can, and it feels good. And it feels good to open up your bank account and look, and you see that you've got not just one account, you've got multiple accounts, and there's money abundance everywhere. Like there's money all around you because you've got it in multiple accounts. You've even got it in a bank that you didn't even have access to, or you have access to, but not convenience to. So it makes it really cool to be like, okay, I got money. I got plenty of money. I've even got money over here that I'm not even going to touch. So it's just it. The methodology was amazing. Mathematically, everything works out the exact same way. Um, but for overall for business owners, like I just the clients that all we do this for our clients and they love it and actually have come through COVID pretty strong as business owners because of how they were set up and where their mindset was at. So that's me, Brittany. If you want to,
Yeah, no, I love that so much because it really is. I know when I started my business, I thank God I found Profit First within like the first like 6 or 8 months or so, because I was already getting to a point where it was, business was stressful. You let your business take over. You think that you have to pump all this money into your business in order for it to survive. And I'll be honest, the threshold for getting into and starting your own like tax firm or bookkeeping firm even is relatively low. I mean, it's relatively low cost to like get into the industry, but you squirrel, and I'm horrible at that, and shiny objects, and I need everything in order to be able to do it. So I was sure I had lots of stuff to be able to run my business, but I was also not paying myself at first, and it was kind of a point of contention between me and my spouse, because I'm like, here I am wasting all this time on my business basically, but I wasn't able to pay myself because I was trying to find too many things to like work in the business appropriately. And it's a really kind of hard place to be in if, taxes, yes, I know I'm weird, but tax is something that I absolutely love. I will claim that weirdo card. I'm totally cool with that. But and it's definitely a necessary industry, but here I am getting the opportunity to do something that I love and work for myself. But my husband, at the same time, I felt like he kind of had a little bit of resentment because it wasn't, here I am taking up all this time to do it, but it just, he was still providing for all the household because I wasn't bringing in anything. It was a lot, it was a big time suck, but I wasn't bringing in any money originally. And then it was probably about 5 to 6 months in when I found Profit First. And it was kind of one of those things where, like Kim said, it just kind of clicked. And it's like, oh my gosh, this is absolutely necessary and amazing and something that needs to be done. I had done this with personal finances to make sure that bills are taken care of, but I had never put it into a business finances perspective. So now most of my clients are on a Profit First methodology. It With COVID, it has absolutely saved a bunch of their butts. And on the taxing side, it's really nice to see at the end of the year that your clients don't owe 50, 60, $70,000 when they're implementing Profit First in their business, because they have done things right. They've set aside the appropriate amounts. We've paid in estimated taxes. For the second year in a row, one of, I guess I can't call her my favorite client, but we'll say that. She's actually getting back because she had excess money saved in her tax account. She's basically able to give herself this year, like I said, for the second time in a row, about a $20,000 tax refund, which is amazing. Nobody gets a $20,000 tax refund. So, especially business owners, but she had that money set aside and she's been doing everything fantastically and responsibly. And it is so great to see a business owner be able to do that, because a lot of times when you think you're a business owner, you've got to pay taxes. Sure, you've got to pay taxes. That is a badge of honor. You paying taxes means you made money. So we can't shy away from paying taxes. Obviously, we want to pay as few taxes as possible, but we also want to have money that is saved aside for that. So that's fantastic and lovely. So yeah. So this right here is this is our Profit First Louisville Facebook group. Even if you're not in Louisville, you are more than welcome to join. This is the Facebook group that Kim and I run. We are in there for questions. We are trying to do more live streams in there and getting stuff done, and just kind of going in and helping out and getting Profit First a little more well known in Louisville. I left this slide on here accidentally, this next one, but we're just going to ignore it. So, and we are going to get into some questions. We've got some frequently asked questions that we want to cover. And then if Miss Jill, if you have any questions you want to go through as well, feel free to put those into the Q&A. But otherwise, I will start. Kim, let me see. I'm going to ask you a question. Let's see. All right. So if somebody takes a salary from payroll, do they still need an owner's compensation account? And then kind of on the same lines, if they take it via a distribution, do they still have to separate out those accounts into profit and owner's contribution?
Yes. So they still want to have the operations account, that where I know that a lot of payroll providers will only take it out of one bank account, which is Gusto, is what Brittany and I are favorite. I love Gusto, but Gusto will only take out of one account. And so you still want to have those profit and owner's account, even though that owner's W-2 is going to be pulled out of, or their W-2 pay is going to be taken out of the operations account. You just transfer that money over. A lot of the times, an owner will pay themselves salary. So they'll just have it, you can even have it automatically set up so that it automatically transfers over what the owner's salary will be and put into the operations account. So yes, absolutely, you still want to have those accounts set up.
And something else too, along with that owner's comp account, like one of the things that's fun is when you see money starts to collect in there. Yeah. You kind of know it's time to give yourself a raise, which is great, because then it's all dependent on you. You don't even have to ask yourself for a raise. You can be like, oh, there's extra money there, I can take a raise. Or like I was saying earlier, me being in that industry that's very seasonal, I can let money collect in there so I can take a standard salary every week of the year and not have to stress out about that. So that's a lovely thing. What about the owners who just take distributions, like the some of the partnerships that just take distributions and the Schedule C people? What about them? Do they need a separate profit and owner's compensation account?
Yes. They would definitely want to have that separate profit account, because that's where the distributions are going to be made from. That's where you're going to go to that PITA, that pain in the ass bank, and you're going to have them print out 4 checks for each of the multi-members of the business. So yeah, you definitely still want to have that even when you have business multiple owners that are just taking distributions.
Awesome. All right, so let me see. Here's one of the questions on here. Since profit, owner's comp, and tax accounts are all for the benefit of the business owner, can they just be one account instead of three? So no on that one. They need to be separated because you kind of need to know what they are there for. Like Kim was saying, you take profit once a quarter. You take tax once a quarter. The owner's compensation, you're taking money out of there bi-weekly, twice a month, however you pay yourself. You're taking money out of there. So those need to be separate so you can really see at a glance what is in those accounts and what is there. So, and then same thing. So kind of with the tax account, a question that we've gotten before is, why is the tax allocation 15%? It seems very high. So people say that seems very high, but in all honesty, I personally think it seems very low. So typically speaking, with any of my Schedule C clients, I usually tell them set aside 35%, if not more. So Kim and I are in Kentucky, so I can speak directly to Kentucky. Kentucky is a flat 5% of tax. Now, if you are a sole proprietor or you are being charged self-employment on the partnership or any type of like rental income, anything like that, if you're an active participant and you're being charged that self-employment tax on that, self-employment tax alone is 15%. And then you're going to be paying your marginal tax rate on top of that. So if you're in the 22% tax bracket, then you're also going to have that 15% basically on top of that. And that's just your federal. Then you have that 5% for Kentucky specifically. And if you're in Louisville, you have an additional, I think it's like 2.7 some odd percent for Louisville taxes. So let's see. Jill is a QuickBook user. So can you automate the split into these separate accounts? So, so typically, no, this is something that I have been trying to get specifically with a couple local banks for probably 3 years. And really, it's kind of a formula issue. It would be great if they could make that automatic, but they can't do automatic transfers based on percentages. Like I said, it would be absolutely lovely if they could. That is one thing that I have been waiting for 3 years at this point, and still no. I've talked with many of the local banks around here, ones that are local based and then also ones that are national banks. And no, I still have not come up with anything for that. But if you're paying yourself a salary through Payroll, you can set that up as an automation. So you can take your salary and transfer that out of owner's compensation every 2 weeks or however, and then the tax amount, transfer that, both of those to OPEX. So then your payroll can pull out of there. And then Jill also asked, tax allocation is 15% of what exactly? So that is 15% of your income. So reason being why that is 15% there, and this is always one of those things that I know I say and it sounds way too complicated. So 15% is actually 30% of 50. So the standard allocation for your owner's compensation, if you're under $250,000, is 50%. So like I personally say, for the taxing side, 30% of your net income should be set aside for taxes. So if that 50% is what we're actually going on and determining in advance is your income, then 15% is 30% of that. And I feel like I just made that way more muddy than I should have, but I apologize. That's just like the taxing law and math side of things. So let's see. Kim, I have another one for you. So
I have to trust you on that one.
Yeah, sadly, I'm sorry.
But
Sorry.
to her question, income, the income
Yes.
account.
Yes. You take it out of you do the 15% out of income out of that account. There we go. That's a more direct answer, but that's why. So all right, Kim, more bank accounts will result in a lot more bookkeeping work. So is profit first really worth the effort? So do you think it makes for more work? I don't.
I love this question. So, because people say this all the time, like I said earlier in the presentation, it's, I can't keep up with one account. How am I going to keep up with 5? The answer is it's actually easier. I know it doesn't seem like it would be, but it's actually easier. You are going to have less transactions in most of those accounts. So your income account, that's just money going in. That's all it is, money going in. And so then when you do the distributions, you're only going to do those transfers twice a month, the 10th and the 25th. So when you're in that rhythm that Brittany talked about, the rhythm that she talked about in the earlier slide, when you're doing that, you're going to have 2 transfers to each account. So you're not going to have multiple, you're not going to be, it's not going to have all your, your website, your supplies, all those things are not going to be taken out of all those accounts. All those things are still going to come out of one account. It's still going to come out of your operations account. So really, it just makes it so much easier, because when you have just one checking account and all your money goes in there, if you think about it, you're like, oh, I have this much to spend, just like when we talked about the smaller plates. Well, then you spend that money on your business, because we're always investing money back into our business. When did we pay ourselves? When did we pay the tax? Like, when did we save for taxes? Like, where's that? So it makes it way easier the more accounts that you have. I mean, what is it they say during the presentation, Brittany? When in doubt, add an account.
Oh yeah,
Like,
absolutely.
yeah. So like, I have one client that she has 2 businesses, so she has 20 accounts. She has 10 for one and 10 for the other. She's a retail store. It's absolutely necessary, and it makes sense, and everything works. So I love when people ask me that question, because I'm like, yes, it makes it easier to do. Like, it's crazy, but it actually makes your bookkeeping easier.
So much easier. It really does. So with the profit first accounts, I know we get asked a lot of times, like, which should be checking and which should be savings. So obviously your operating expense account still needs to be a checking account, but typically most of the other accounts can be savings accounts, because you're not going to be taking you're not going to be consistently withdrawing money from those accounts. You're only going to be making 2 transfers out of those accounts a month. And typically speaking, most banks don't charge for deposits out of their savings accounts. They only, like if you have a money market account, which, that for a tax account somewhere is fantastic, because money market accounts typically have higher interest rates. So, and those usually limit like the amount of money that you can take out of, or how many transactions you can take out of an account. So typically speaking, your income account, your tax account, your owner's compensation account, and your tax account can all be savings accounts if you want them to be that way. Like I said, if you want to take advantage of the interest, not that that's much right now. But your operating expense account definitely needs to be a checking account, because you don't need something that's going to be limited by the amount of transactions that you have in there. And then, so Jill, this kind of goes along with what you had just posted in there about your local bank charging $2.95 a month per account. So a lot of people always wonder which accounts or which banks are the best and most flexible in terms of creating these multiple accounts. So locally, my recommendation is Republic Bank, because they have free checking accounts, and they also offer a lot of extras to their accounts. So you get free checks with their checking accounts, and you get like a free deposit stamp, and most places will give you a free debit card, but that's one of the perks that they offer. So Now, there is a bank that I really like online that is free as well. It is Relay Financial. So one of the things that I do is I use Relay Financial for my main bank where everything is, because they also offer free ACH transfers out. And that's something that a lot of brick and mortar banks don't offer, is like that free ACH out. So I use Relay Financial for my 5 foundational accounts: my income, owner's compensation, profit, tax, OPEX. I have a debit card just like anywhere else. For that account, it's very easy to go in and set up those accounts. But what's nice about that is I can actually pretty easily ACH transfer to my pain in the butt bank. And now I'm not going to say the name of the pain in the butt bank. You can message me separately for that. It's a fantastic bank. It's just they are inconvenient for me. They're not close to my house. Their hours are very limited, and I can usually never get there. So they're the ones that have like the lobby hours of like 9 to 3. I don't have a debit card, online access, or checks for that bank. So I've made it very inconvenient to me. Basically, when I do those ACH transfers to that bank, that money just sits there. So, but my go-to locally is definitely Republic. For online, I really like Relay Financial. Capital One used to have a fantastic account. It was Capital One Spark. I don't believe they have that anymore. There are a number of other banks online that are pretty decent as well, but I do really like Relay Financial. That's definitely my number one recommendation. And like I've always said to everyone, if your bank account is charging you money to hold your money, that's kind of just ridiculous. Yeah. Let's see. So are the accounts in the PETA bank checking or savings? So typically those are savings account or whatever have higher interest rates. A lot of times I know money market checking accounts will have higher interest rates than a lot of like just regular savings accounts. So I will say I know Park Community has a fantastic rate on their money market account as well. And then a couple other places do as well. So really it doesn't matter. I would definitely say whatever has the highest interest rate and is going to let you take, one withdrawal every 3 months, because you don't need any more than that. But as long as you have a routing and account number and you can ACH transfer into that bank, you're pretty set. So
yeah, mine are savings. My PETA accounts are savings.
Yeah.
And I love my PETA bank. I really do. I think it's great. It's not close to my house at all.
Yeah. Yeah. Like a lot of times that is the that's the determining factor. Like just as it's not convenient. So
how
if
far
you want to
away
like put your pain in the butt bank accounts in Elizabethtown or Bowling Green, you're welcome to do that.
Oh my gosh. To drive far to get your distribution.
So exactly. Oh my goodness. Yeah. All right. So when let's see. So all right, Kim, this one's for you. Absolutely, Jill. So where do I pull the money from if I don't have enough money to pay expenses from my operating account?
You don't.
I love that, because that's exactly my answer. You don't.
You don't. It's just like the toothpaste. You're gonna skimp and save, and you're gonna. If you have a good tax or profit first professional, which is what Brittany and I are. If you have somebody that's your PFP, we're going to help you to make sure that those allocations are correct and doable, so that you're not going, oh my gosh, all of a sudden, my percentage I pay, say you have a business where you've got a bunch of contractors, and that alone can be its own allocation and its own account. But I had somebody that theirs was really, really high. And I was not going to make their percentage 50% or 30%. We had to make it appropriate to what they were currently, their current allocation percentages. We had to do it for that. And then every quarter you meet with your PFP to make sure that you're trying to bring those down. You want to bring your operations down, and you want to bring your owner's pay and your distributions up. Like I know right now, Brittany and I have talked about our businesses, and her operations are at a really good place, and I'm trying to get mine there. I'm not there yet, and that's okay. Like so that's what my goal is. Every quarter, I'm changing those percentages so that they're going the right direction, and I'm paying myself even more. So when somebody says I don't have enough money to pay my, number one, if you don't have enough money to pay that with a high percentage, we really need to like look at your costs. We really need to like kind of look at what kind of what's the word?
This is a perfect spot actually for a plug for Jill, because Jill Lowry, who's actually on here right now, she is my go-to lady for a first step in cutting expenses without that like pain of actually having to cut expenses. It's kind of lovely. So Jill, I'll have to like link you in this for the replay and everything too.
I saw that she's our neighbor right out here in Shelby County, and when she said that she helps business owners, I was like, oh, I want to know what she does. I want to know more about Jill's business.
She works with Schoolie Mitchell, and she basically she goes in and she takes a look at a business's expenses and she negotiates them down for you. Her service is to go in and take a look at it. There's no cost to the business, no upfront cost. It's just once she negotiates down those savings, she takes a percentage of those savings, and you make out, and you're still saving a lot, and she's getting paid, and it's a win-win for all. I love it so much. She is the first person I refer people to who are needing to cut expenses.
That's awesome. Yay, Jill. I want to learn more about her. Well done, Britt. Yes, we all need a Jill in our lives.
Yes, absolutely. Let me see. So a couple more of the questions that we have. All right. I want to pay as few taxes as possible. Should I run up expenses to cut taxes? So a lot of accountants that are out there will actually try to tell you to like run up your expenses to like have lower taxes. But like I said earlier, paying taxes is kind of a badge of honor, and it means that you made money. So if you're shelling out this money for business stuff, I mean, if it's stuff that you need, sure. But if it's stuff that you don't need, that's like, that is 1-for-1 taking money out of your pocket as the business owner. So no, I don't recommend that. Yes, I'm going to work with you as a taxpayer and do tax planning to make sure that we're taking the most advantages as possible with your normal spend. I will definitely encourage people to set aside money for retirement, because that is something that can reduce their taxing implications now, and it's actually money that they still get to keep. So they're not losing anything there, but it definitely has a tax advantage. So no, I don't want you to drive up your expenses to pay less in taxes, because it's not helping anybody out in all. I mean, it's helping the IRS out. They're okay with it, like, but it's not helping you, the business owner, in any way, because you're gonna have less money for you just as it is. Let's see what else. Let's see. I think, Kim, this might be one of our last. Oh, nope, 2 more after this, and then we'll be good. All right. So, Kim, should you implement Profit First retroactively?
No. Next question. Anyway, no, just kidding. like no. You want to start, you're going to allocate on the 10th and the 25th of the month. So you want to set up your once you set up your bank accounts, that's when you want to start your percentages. So if you open your bank accounts on the 5th, you want to start that first Allocation on the 10th and then on the 25th.
Perfect. All right. And then last one, I think, is can someone use Profit First to identify a good business to buy? Abso-freaking-lutely. Because if a business is using Profit First successfully, which anybody who implements it fully and consistently will do good at it. Profit First legitimately has 100% success rate for people who implement it fully. It is what it is. It's math. It's basic math. It works. But yeah, absolutely, because right off the bat that the business is making profit if they have Profit First implemented, and you can see at a glance that percentage of how everything is going, what the owner is paying themselves, how much is being spent on expenses. It would actually be something good to do as well, and anybody can use that Profit First, the instant assessment calculator that I put in the link earlier. You can actually use that just by looking at a business's profit and loss statement and do that instant assessment and get a real general idea of what percentages they are right there. We do a full Profit First evaluation and conversion rollout plan if anybody wants to see like real in-depth detail of exactly what these percentages are. The instant assessment is pretty broad. It's not like diving super deep into the numbers, but we can do a more comprehensive evaluation of a business. But if a business already has Profit First involved in it, then it's definitely going to be a good buy. And it's also something that's great too if you want to sell your business. This is something that's fantastic to start 2 to 5 years ahead of selling your business and getting this fully implemented, because I was actually talking to a business valuation guy the other day. And he's like, the businesses where you can see this type of information sell for a lot more than businesses where this information is hidden. Same thing goes back with businesses trying to like drive up their expenses. That's not good for the business, but it's also not good for the business owner. You drive up your expenses and show that you make less money, you may not be able to get that mortgage on your house. You may not be able to take out a loan to buy another business because it looks like you're not making any money. So the same thing goes when you go to sell your business. If you make it look like your business isn't making any money, somebody's not going to pay top dollar for it. You want your business to look like it's making a lot of money, so people will pay top dollar for it. They're a lot more likely to buy a business that's making money and know that they're going to have a good return on investment than basically a crap one. And who knows what's going to happen from there on out. So,
Brittany, don't you love it when they say, hey, I need a loan, so can you make it look like I've got a lot of money, but I don't want to pay a lot of taxes, so make it look like I don't have much money.
Yeah, I basically hear that every single year. And I'm just at that point, I'm like, I'm sorry, I can't help you. The numbers are the numbers.
Yeah.
The numbers do not lie.
Right.
So sorry, we can't do that. So, but I think that wraps us up, and yay. So U plus Profit First equals happy little piggies on money. I love the happy little piggies. They make me so happy. Yes, you all can make fun of me for that. Jill knows me well enough to make fun of me for that as well, but I love you both. So, yay, I'm glad that you came too, Jill. But yeah, if you have any more questions, feel free to reach out to me or Kim. Both of our contact information is in that workbook, and I do plan on sending out a replay about this. So Jill, if you have anybody that you want to share this with, you are more than welcome to as well. So I'm so glad that you attended, and I guess that is a wrap, guys. So thank you so much. Bye, guys.
Bye.